Well, let's turn our attention now to the investment environment in West Africa. We're joined by Ian Greenstreet, who is the chairman of Infinity Capital Partners, essentially debt, and is also board director of the Diamond Bank, which is based in Nigeria and essentially deals with equity. So we're covering all the bases there, Ian. Just paint for us a picture of the investment environment at the moment in West Africa.
Well, clearly, the depreciation in the oil price and potential further depreciation is having an impact. It has an impact on different players in different ways. One of the key secondary impacts is the potential impact on currency, because if a government is suddenly receiving less revenue, it's unable to then necessarily shore up its local currency, and that has massive impact on the local countries. There's also a bit of a wait and see an approach, because people want to try to figure out whether one's actually at the bottom, whether the price is going to continue downwards. So I think that's also key. But the bottom line also is that if you're already invested in a project, you need to continue to manage that project effectively and manage that project with no cost overruns and within budget and deliver effectively.
So if you're, with your existing clients, whom you've either issued debt or you've issued equity on, presumably you've done your due diligence beforehand to make sure that the team is there and able to do that. But what are you looking for? What are the measures that make you think, yeah, this is a good investment or this is not a good investment?
Well, it's clearly the quality of the asset, absolutely fundamental. The quality of the development, the quality of their management team, their ability to deliver. Those are the absolutely key aspects. And from a Diamond Bank perspective, it's also important you have the margin of safety in terms of the return, so that you are able to have so the relevant client has the balance sheet to be able to manage the downside. And I think that's quite important. I think for us, it's where we're slightly more cautious is the newer players, where they have less access to capital, they are more highly leveraged, and therefore are less able to manage that downside. And one of the things we carefully look at is where the management team are managing too many assets, where they're too stretched and therefore unable to focus.
So does that mean that if you're trying to create this margin of safety, that presumably means it makes debt, for example, more expensive? So are we actually seeing a squeeze on some of the smaller operators and explorers?
Well, I think there will be a squeeze on the smaller operators. There will be potential consolidation of the smaller operators, absolutely. I don't say it's necessarily making debt more expensive. I think that's a function of other factors, such as the risk-free rate within the country, such as where a bank wants to place its assets. But just one minor correction: Infinity Capital is focused on the equity side, whereas obviously Diamond Bank is focused on the debt side.
Yeah, but I mean, it is that it's looking at this squeeze there, a credit squeeze or whatever kind of squeeze.
Yes.
There's a finance squeeze there.
Yes.
It's harder for these companies who need the cash to get it there, and as the oil price goes down, that's going to make the situation even worse.
Absolutely.
So is this an opportunity for acute investors to get into some cheap bargains, or is it perhaps the beginning of a meltdown in the sector?
No, I think it's a great opportunity for our clients and companies that are very highly capitalized, who've got the cash, who can manage the downside, to pick up first-class assets from players who are perhaps less able to manage those assets. So we see it to be an excellent opportunity, provided that you've got a strong balance sheet.
So let's talk about some of the kind of projects that you're involved in. I mean, Nigeria is a main focus, obviously, and the Greenfield Power project that you've been involved in Nigeria. Why is that so interesting?
Well, I think power is an extremely interesting area in Nigeria. If effectively, if you look at Nigeria, you've got 117 million people with an installed capacity of a few gigawatts, 5 or 6, 7 gigawatts. You look at South Africa, has an installed capacity of around 40, 50 gigawatts for a 50 million population, i.e. a ratio of 1 to 1. And so therefore Nigeria really needs to rebuild its power sector so that it's able to move forward. Power has a direct relationship to the GDP of a country. So we have been involved in co-managing the first private sector gas-fired project. And we are very keen on it. That's about to be commissioned by the president in Nigeria and has such a massive multiplier effect, a way of generating wealth in the whole community. People talk about, sort of poverty reduction. No, I think this is the way to do it, in order to be able to give people the tools required to be able to generate wealth.
So it does seem that if you're looking at an area which is, has its degree of risk, but you are building into it a margin of safety,
yes,
as you said, this might well be the kind of area that some investors would think, yeah, maybe I should go into there because I'm going to get a decent return. So from an investment strategy point of view, what should they be looking at?
Well, I think that it's an excellent opportunity, but timing, it's all about timing. So I think that when you see a consolidation arising, when you see weaker players that have good quality assets struggle, then and where you see that their perceived equity in a project really not being there, then that is an absolute ideal opportunity for another organisation to say, you know what, all the legwork has been done, all the feasibility studies have been done, it's now a matter of coming in and executing. I think they're first-class opportunities to be obtained very soon.
All right, Ian Greenstreet, thank you very much for joining us.
Cheers.